So performance measurements, I think, will play a significant role in our case study. Correct? There's we've got so many factors to consider. It's not just one company. So many stores, as well as to the mix, they have added franchisees rather. Okay, so they will play a significant role. Now, we talk about the financial in performance measurement. We will look at financial indicators as well as the non-financial performance indicators.
Yes.
Okay. When we look at the financial indicators, right? There is benchmarking, analysis of report by dimensions, and problems with financial performance indicators. We go into that. Okay. Let's look at benchmarking, analysis of reporting by dimensions. Right? What do you think? What that is benchmarking and analysis of reporting by dimensions. Correct. You can compare against people as well as even within your stores. You can benchmark, right? So you have so many stores, and then you can really benchmark. So what would you be benchmarking? That's a question. So we know we can benchmark. So what are the KPIs for benchmarking?
You can see the best store we have in terms of
breaking up, Yakub. You're breaking up.
Yes, do you hear me now?
No, you're up. It's very bad.
It's bad.
Anything from you, Gavin?
Yeah, benchmark processors.
No, they're specific. If you have to be specific, right? So what would you benchmark? But let's say, like in these guys' case, I've got 900 stores, right? 900 plus stores. What would you be benchmarking? I would look at even at a high level. I would look at cost of goods sold. This is at a very, very high level. I'm looking at cost of goods sold, right?
So you would compete with your peers, or compete within
across stores. Across stores, I'm looking at, what is my cost of goods sold, right? Then, so I can look at cross. Then you look at what is the direct cost, right?
Profitability, volumes.
Then we'll look at our favorite, which is admin costs, right? Because we want to see what is going on in here.
Exactly. Yeah, in which areas, yeah. Because we are looking about.
Right. We are cutting across to see.
Okay.
And I'm asking you to be specific because the examiner does not like when you give generic answers.
Okay.
Right? He's expecting you at that level to be quite specific and say, okay, I have identified this is what I want to do. Right? Process, I agree with you, but then it becomes quite generic.
Okay.
Yeah. We don't know what process is unless you very clearly state what process is and what measurement is it going to be, right? Okay. Analysis of reporting by dimensions. What is that? Yeah.
Dimensions. Dimensions. What? Yeah. I'm not what does he mean by dimension, because in my profession, when I say dimension, I'm talking about different aspects, like
What?
geographic divisions, for example, of divisions.
Mm-hmm.
When you graphic, I'll talk about the performance of the stores in the eastern region compared to the western region.
Yeah.
So in this case, the graphical aspect, does he mean the functional aspect? I'm not sure.
Right. What about you, Gavin? What are your views on it? What are your So is dimensions. The reporting is done through dimensions. So mostly we are looking at financial dimensions, right? Those angles that we are looking at. So, in benchmarking, we can benchmark financial, non-financial, right? So this could be financial. Of reporting by dimensions, the dimensions would be the financial dimensions, right? In this case, a lot of financial kind of reporting. That's what we're talking about. Okay. Then let's look into finance indicators, right? Again, this is nothing but our ratios. Okay. And all of you are quite familiar with the ratios, right?
Yeah.
And you are calculating the normal profitability ratios, liquidity ratios, and things like that to kind of stand. Okay. Then return on investment, or ROCE, return on capital employed, also another ratio that you can calculate. Okay. But these
Define the capital employed in this case, because in the equity, strictly the equity, defined in the as an income term. Equity in the equation is straightforward, easy to compute. But when you talk about capital employed, are both the funds that being invested by the owners and the loans?
Yes, correct. The total capital employed. Here we're talking about the total capital employed, ROCE. We will take the total capital employed, which is long-term loans, capital, right, and equity.
I see.
Yes.
Oh, that's
right. Yeah.
Sorry.
Yeah.
It's a trade organization.
Right.
Why now? Yes, fine. You're taking the long-term loan. Because I think it is total as minus current liabilities. It's a if it's a large trading firm, most of your working capital lies in short-term working capital. And if you do this ROCE, if you use this computation, don't you think we miss out a bit?
The of this is okay. Capital. Art capital, which is long-term capital. Right. Looking at long-term capital, if you have invested in my company for a long-term basis, I put in shares. Yaqub has put in long-term loans, right? So in that sense, I'm looking at it to say, okay, the return that you get, the long-term commitment that you're giving.
From that point of view, not
correct. But what you're saying is working capital.
Yeah.
That's the other. Right. Work is different to that of the return on investment. Right. And ones are purely return on capital employed. So what you can do is calculate the ratios right?
Mm-hmm.
In your finance, you have the financial statement, calculate the ratios, right? We will do a ratio analysis as well. Okay.
So with ROI would be that where they do it on CPIT, it's on net profit.
Correct. Yes. Okay. So ROI and RI suffer disadvantages,
Yes.
right? Of course, both of them. Thing is, in the absence of none, right, we choose something. We can't there. It is disadvantage. I mean, they have disadvantages. Therefore, I'm not using nothing, right? That's not kind of a view that you will take. We are conscious of the fact there are disadvantages. Therefore, we are not relying 100% on this. Okay. Another thing that we can get asked is, we've got these are the ROIs or the ROCs of each different stores, right? And what are your views on it? When it comes to an answer, then you should be able to discuss the disadvantages. Right? Saying the assets, the investment can be based on net assets. Assets or replacement cost. None of these is ideal. Investment centers might use different bases to value inventory and calculate depreciation. Right? Any changes made for the use of head office services or allocations of head office assets to investment centers are likely to be arbitrary. So there's a lot of cost allocation done. Then this whole thing works in a different way. Yeah, it can be massaged if assets base of the ratio is altered, increase or decrease payables and receivables by spreading, delaying payments and receipts. Okay, so what we're saying is you can manipulate this quite easily, right? So we should be aware of this. Okay. The biggest problem in divisional performance measurement occurs if a division maintains the same annual profit, keeps the same assets without a policy of regular non-current asset replacement, and values asset at net book value.
Yeah.
This is a problem.
Yes.
Right? Yeah. Yeah.
I think because encourages investing in new assets. When you divide by how that has been depreciated for 4 years.
Yes. Yes.
It will be very small, and the percentage, the return on investment will be huge. Will be looking
exactly.
nice.
Yeah.
So people tend to shine away from. Yes. Yes.
From you, Gavin.
Anju, you can maybe you can use the gross base depreciation. Then would be because on the income side, Anju, I don't know whether they've taken this as a total measure, because on the income side you would have taken a provision for the depreciation also, so it has got lessened off the income side. So maybe you do EBITDA versus book.
Yeah.
So the EBITDA will be your income, which has not been netted off for depreciation or tax. And book looks at the depreciation on the other side. So that would give you a more
better.
Yeah, I think maybe you can
a balanced view.
Based on based on the company. If the company has a huge if that is negligible, then we can use this.
Yes.
Now, yes, there is a huge fixed asset base, so yes, you will have some manipulation. How long they do the depreciation also.
Correct. And the other thing I would see is who is maintaining the fixed assets. If they separated for one of the stores, right? Then you will be able to calculate a store return on capital employed, right? If they're not, then we are in a very difficult situation, right? If another thing is per region, they will do it.
Yeah, at least rather than
yes.
I think a key factor here.
Correct.
Everything, you know,
yeah.
How are they managing it? Is it at centralized? Everything is.
Yes. Thing is, the factor is so like Yakub, you're very right. Where people, if you entirely depend on this kind of RE, the measurement, they shy away from investment. So that is one aspect. So there could be, this is one amongst many KPIs.
Yeah, you can't get it in isolation. That is all the numbers.
Yes. Yes. So ROI, I would emphasize for you to look at, right, the advantages, disadvantages of ROI, right? So you have to look into the advantages, and disadvantages. Because of a question that they can throw in. Because you have asset base, right? So it's that they could question this. So this is exactly what we said, right? That which does not support our growth as a company, right? Pure of the way we measure. Okay, value added. This is a very interesting. I just had a conversation with another lady. It was very confusing to get this meaning of this. Okay,
it's a new concept.
Now value added, basically. Let's see what you guys get out of it. Let's what you understand.
The whole concept here is to differentiate between the pure, strict accounting profit and the economic profit, and there is one major difference between the two. Economic profit takes into consideration the cost of capital. It is implied. It's not on paper. There is no invoice, but it says they have bids at time. They say bids at time, money invest, and it's an equity investment, right?
Yes.
But the economists say, well, bids at time. There is a cost for this capital. You have to account for it. Accountants say, well, no, this is zero. We will record zero on our books because there is no interest charge. There is no invoice involved here. And there, the major difference plugs in. There's a cost of capital to be considered when computing the economic profit. To the strict defined accounting profit.
Right.
I think that's the major idea here, Andrew.
Yeah, okay. So what you, Gavin?
I think on the same lines as Yakub, I think it's about calculating economic rather than profit. The only thing to understand is they have used replacement cost of assets. Now, which period is this? It talks about a 3-year period, 3-year horizon, but it looks at, I think, from the new mention that will come and say capital. This is in your NP or.
Yes. Okay.
So if your capital is higher than what you are earning, then sometimes you question why run the business.
Correct. Right. So we're trying to measure, basically, actually you measure the management performance.
Yes.
Yeah.
Right? What happens? Okay, you can calculate economic value added in a case. The reason is it is manufacturing. The question I had with my previous student was I had given a question to say, well, can you, what industry can economic value added utilize?
Uh-huh.
That's a very interesting question because they had consultancy as they had manufacturing, right? They had examples of like of manufacturing of like printers, computers, and even let's say pizza, right? Not question, but in our question, we can say the pizza. Pizza is manufactured. But if I go into consulting, I can't calculate it, right?
Now they say replacement cost of. I took here this example on page 225, the large group.
Yeah.
So they are on replacement of assets.
Yes.
So looking at from the asset side or from the capital employed, company will require capital. If it's a consulting firm or any company,
yes,
you have a cost of capital.
yes,
Either to grow the business, you need to another capital outlay of say another 20-30 million coming in. It can be coming through borrow capital or
yes.
So is there a shouldn't there, is the DBA applicable to all companies?
Because you see the so it could add the assets at their replacement cost. Okay, now that is a key term here because now when you look at a consulting, marketing is people, right? It's machines.
Exactly.
As soon as we go into machinery, manufacturing, we talk about machinery. We talk about exactly. It has to be capital intense. So this again is a good point for you guys to talk about because not many people will talk about it because it's a bit confusing. You see? And the fact that you can also emphasize the fact, well, time is a manufacturing company, right? And manufacturing company, you can use it. Right?
Andrew, do you consider pizza time a labor intensive or capital intensive company? What do you think?
Interest, I would say, you can go into more capital intense. Right?
Well, it requires this type of company, I mean, it requires both machines and people to run them.
Mm-hmm.
Every pizza store, there is a guy sitting by or standing by the machine, you know, to put the toppings.
Not necessary, right? Not necessary, isn't it, Jakub? I measure all those things, right? If I measure all of it, say, right, I'm going to do X amount of pizza today. It's like factory model. It will go through. Right? So I put, there is certain amount of toppings that I put. Depends on the design of it. I would say one person can handle the whole one store. Right? How high tech your technology is in manufacturing. Yes? Yeah?
Apply this case.
It does apply, and this is a very good point for you to bring in, because you see, you need to bring in to them things that others don't talk about. And a confusing area for a lot of people. Right. Let's to this. It to me now, because I was teaching another student, and she was struggling to figure this out, and she level 3, the final stage student, and she couldn't figure this out. Right? So because of that I thought, yes, definitely this is quite applicable for us. Okay. Again, talk about costs which are normally treated as expenses under generally accepted accounting principles may be added back to NOPAT are considered as investment building for the future. Examples may be research and development, advertising, and goodwill. These are added back to accounting profit to reflect the economic reality of the expenditure. Right? That is where things change a bit. Adjustments are sometimes made to economic depreciation, so it reflects the economic falling asset value due to wear and tear or obsolescence.
So, Andrew, like R&D, research and development, it is against an accounting rule.
Correct.
But in this case, we will capitalize it.
Back, because I'm saying it is going to give me a benefit later on. Okay, it's like an asset.
Yeah.
Okay, that's doing. Exclude from NOPAT as it's taken into account in the capital charge. Equals replacement cost of net assets employed multiplied by the average cost of capital. Right? Key thing here is they take the replacement cost of net assets employed. So you much of massaging around the net assets. That's this is. Now the other side of it is it's not an easy thing for you to calculate. Right? It's not the easiest thing to calculate. It is difficult. Okay.
Yes.
Are very easy to calculate.
Yeah. Replacement cost is subjective.
Correct.
And you can get different prices from different resources.
Yes. So that's it. And if you're trying to, again, it's a good measure, right? If you got it, it is a good measure to have, and you can work on it, and it's something that you can propose, but also at the same time state, okay, one of the key disadvantages may be trying to calculate it. It's not the easiest one to calculate, right? That's we don't find many companies using this economic value added.
Yeah, let me a few seconds just to let you know example, a real life example we have in our group here. We startup company, like the other subsidiaries. Established credit line facilities with the bank. Whenever funding, they go to the bank and they take a short-term loan to get things run, and the loan, let's say, at 2%. But for me, as a startup company, I have to go back to the owner and literally beg for me. What percentage do you think he charged me? Each percent.
Okay, charging you.
2%. Yes.
Well, that's rich.
Yeah. So the owner want to give us. Yes.
So this is a startup business. For the risk.
Yes.
If he will not take 2%, he will lose 100% of the capital employed in the company. So he started, I presume. Now, if you go to the bank, maybe other than that, you charge 9%. but he is telling you a capital cost, which means that okay, it's based on his business. He's putting your business. It's a cost.
Well, we've been established since like 5 years ago, and we still incur a loss. Because of that, we need funding from time to time. He says, "Well, I will give you money, but I will charge you 9%.
Yeah.
Otherwise, go to the bank and talk to them and establish credit facilities, blah 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 blah." Yeah.
So your company is charging you 9% on the cost-based lending. Huh? Is coming to you as capital or is coming to you as short-term loan? How is it coming?
And again, the line is breaking.
Yeah, he's giving this money to you as short-term loan, or he's giving
as a short-term loan, yes.
Intercompany loan.
No, it's a company, right? Because he's an individual.
Yes.
Yeah.
Yes. So what I wanted to just why are you doing this example? Because of the cost of capital,
Yes. Weighted average cost of capital. Yes,
that's my point. Yes.
That's yes. So that's what I was saying. That if you use your current now, this will be parked on, I don't know where it will be parked on, short term loan or long term, where it will be parked.
Yes. Well, because I'm losing money, my company is losing money, so I can't pay it back. So it's a long term. In reality, it means years to pay him back all the loans that he's given us.
Right.
Maybe going directly might be better.
The problem is the banks will not give me money.
Yes, because he's making a loss, right?
Okay. Making a loss. I'm a new company.
Yes.
They trust us yet,
Yes.
Okay.
It's very interesting in the sense, see, there's a lot of opportunity in the market for your service, but you are finding it difficult to manage the cost.
Exactly. Yes.
So this is a problem that you're having. Yeah. Have you and you also said you have admin costs, correct?
Yes.
And reason for these admin costs?
Well, it depends. How do you find a lot of admin costs? I mean, is it a lot in fact, or is it necessary evil? I mean, we started a company. It's like 4 years ago. We started our operations. What we need? I mean, we need to establish divisions. Even if you start on day one, you have to have accountants, you have procurement, you have to have marketing, HR department, and to establish the operations. And so I mean, I can say fairly that our admin is reasonably reasonable, but problem is because I'm a new company in the market, I have few contracts that contribute a small margin to cover my overhead.
You want more and more contracts, as well as yes.
I want the owner to be patient, give us more time, cover the overheads in the future. We try and identify if there is an excess employee we don't need. We try to transfer him to another subsidiary or let him go, and that's what's going on now. To make us lean. But most of my administrative workers, accountants, I think it's only me and another small guy. That's it. So we fire one of us. So with skeleton level, let's say, level of the admin costs. But the problem is I don't have much of contracts. Yes,
this is your issue. So
I think it's not maybe you do cost to income ratio, maybe
I can't hear you.
Yeah, I think the volumes are down.
Correct. What kind of the structure in place which is necessary to operate,
Exactly,
right?
yes.
But the sales is not sufficient to support that structure.
Yes, Sanjo, exactly, yes.
Economies of scale, like if you increase volume, you need to do the same, when you do, if you both are there, so that will help your cost.
That was your yes.
And it's very competitive also. That's the other point. Your retirement.
So now let's look at non-financial performance indicators, right? You look at things from employees. Now, for us, it becomes quite important. Web of NFIs, right? Can be provided quickly, easy to understand, tailored to circumstances. The quality of incoming supplies, the quality of work done, measure of customer satisfaction. Now, for us, these two become quite important, right? So we not look at our just into the employee side, right? Imagine people like McDonald's, right, and FC, they currently have this issue, and we would also, because we are hiring, right? So we have a lot of turnover. Yet there's turnover. Okay, consistency, constantly. But how can we keep them at least to, like, if they're the age of 16, right? How can we keep them 16, 17, 18, at least 19? How can we keep them for years? If we can, can keep them for a few years, right? That is going to be the key. How do you think you can keep? Now, though we're talking about some strategies like the management accounting, but I want to bring this in because it's also a key thing for you. How would you do it?
Just for example, profiling plans. I want to treat my employees in pizza time as partners, not as employees.
Yeah, remember when you were 16?
Yes.
Remember when you were 16? Do you care about profit plans most when you're 16?
Well, I have worked, in my let's say when I was like 8 years old or 9.
Yes.
Cafeteria. You know what cafeteria is? It's like a grocery store or stuff.
Yes.
So I had that, small experience in my life.
Yes.
But what I'm talking about here, I want to inform my, new joined employees. If you complete 5 years with us, you will start to share in our profit. It's not only salary. So you'll be treated as a partner. You will have your own share of the profits from the company. So in this case, I make him feel that he is not just an employee, a wage slave, but he is a real partner, and his actions when encourage him to make the company more profitable.
So this actually is used at Starbucks as well. Profit sharing.
Oh.
Yeah, we used profit sharing in Starbucks. Another thing that was really important in the US and which Starbucks did was health insurance, right? So the benefits, health insurance.
Necessary to have health insurance.
Not really, no.
In case here it's mandatory.
But in the US, right? US. And because the founder of Starbucks, I mean, he came from a very, very, very poor, in a poor family. They went through difficulty. One of the biggest issues was, he found where, his father lost his job and because of illness, and he didn't have insurance. right? He made it a point to say, if ever I have a company, I will have the health insurance for my employees, right? He put that through, right? So that is a big thing. In the US, the first thing people say is, like, you get a job that gives you medical insurance. That means that you have made it, right? Made it. Correct. We take things for granted. We think, but the US, it's a big issue, right? What else, Gavin? Any other creative ways that if you have, you're thinking of 16-year-olds, right? How do you retain these 16-year-olds?
Profit sharing, it's maybe like incentivized. They are there to development you can, but then it's very short term, either you can become store manager.
I think given college education,
Yes.
to pay their college tuition or major part of it. What do you
So
think?
that's an interesting thought. Partnering, right, in education,
Yeah.
right?
If he's me, I will pay his tuition.
Yeah. So partnering in education, right? So you become a financier for that, right? Not going to do it for everybody, but you will select your employees, right? And you have this scheme. So obviously the guys who are interested will go into this, right? But then you will also have something like community building, right? Where come together as one. So it's not about you going to pizza time, doing work, getting $20, getting back, right? You're creating a community, right? Suddenly, it is more than money. Going there, it becomes part of my life. It's my lifestyle. I go there. They build things for the community as well, right? These community building activities, we will link it to CSR. Happily link it to CSR as well, right? So you're creating with you a people who are going to be, you are educating them, plus you are making them, involving them in community. You're making them very good citizens, right?
I can add one important point here or two. This helps us, to retain our employees, not to improve my, turnover or the future of the company. Who will run it after the current
generation? Then they build. Correct. This will build succession planning.
Exactly. And I know some stories. The CEO was just a truck driver with the company.
Correct.
The retention is very important, for the life of the company. Planning. And number two, Andrew, where I worked 4 years.
Right.
We have something called DSPP, which is to discounted stock purchase plan.
Right.
So every Schlumberger will deduct, a small amount from my salary. They pay the balance to purchase stock for me. So after I leave the company after 10 years, I will not only get my end of service benefits. I will also have shares in Schlumberger.
Right.
And after 4 years, I'm not joking here. They paid me 10,000 USD. Can you imagine? I spent 4 years with them. I resigned to continue my education, and I was paid 10,000 USD. And that's what I'm talking about 2006.
Oh, yeah.
Yeah, imagine if I stayed, stayed until now, how much that amount will be.
Correct. Correct.
And that's I think in the time we can apply that.
Yes. And what did you call it? Discounted?
Stock is a plan.
You can, yeah, we
DSEP.
have, yeah.
Had this in similar thing with Origin Energy where I work in Australia as well. So but not, they give you stock, so not discounted, not a discounted, but they give you stock as bonus, right?
That's great, you know. So,
Yes.
anything. That's great.
No. We have come up with some quite interesting, you can see interesting ways of retaining employees, right? That becomes quite an important thing for us. When we look at, because when you have this, then our labor turnover decreases, absenteeism is skill levels improve. Because remember, they're the young guys who are there and who will come up with different innovative ideas, right? It's not the fellows who are sitting in the boardroom who will come up with the innovative ideas, right?
Exactly.
The people who are on the ground, facing the customers, right in front of them, they're the ones who say, what about, shall we do this? Shall we do that? How differently.
You're absolutely correct, Andrew, because people sitting in the top not necessarily see the details.
Yes.
To be honest, in my current culture here in Saudi Arabia and the Gulf, that's not the case. Unfortunately, that's not the case. The top management doesn't value the guys, on the ground.
Yes.
And they believe these small guys, the little guys, can bring an idea that can change the world.
Yes, of course.
They don't see this.
Yes. Sometimes the is such, people don't value another human being. They look at the grade that they and they think they don't have brains, but it's not so. So circumstances have put you there, but that doesn't mean that they can't come up with some brilliant idea. Right?
Exactly.
Yeah, you do have programs where you put up every month and
Yes.
Let's say, at least you what will employee that you either the value.
Exactly. Right.
I have watched Leonardo DiCaprio's movie Inception. Did you watch it, Andrew?
Yes.
Inception.
I wish I can have access to the brains. I mean, a lot of brilliant ideas and human beings we can utilize and make them reality.
Mm. One of the things that Google said, some of the employees from Google once were giving a lecture, and they were saying that they develop their kind of programs, and they have these developers across the world. The guys who are like all interested in what's happening, what's the latest thing, the kind of app that they develop. And what Google does is they just send it out to all these developers, the beta version. They send it out, right? And they said it's unreal what these guys come up with, right? Say, we are sitting in like US, there, and your experience is limited. But guys, they have exposed different kinds of environments, so they come up with different uses for this application, which they could have never ever dreamt of.
Wow.
Right. So that's, again, you can see how innovative companies, what kind of things they use to kind of put it out there, and then say, hey, listen, let's see what happens. Let's see what they will bring out.
Exactly.
Because one recently that yes, okay, the key company.
Yeah.
They have more people on the marketing side in terms of behavioral side. There are more people there now, because now these products are all, depends on not what you want, but
Correct.
when you get another need, you create a need.
Yes.
So where the thing is coming now, you have the laptop now, you have an iPad, you have a phone, you created a need. You have that.
Yes, I mean, why the dickens do I want a phone? That's all my email. Then I go and buy an iPad. Why do I need it? Then I have a laptop.
But it has become convenient. You're on the go. You come home, use this. So it's for to each place.
Yes. You never about it, but the company brings it onto you.
Onto you, and they ask the question, why not?
Correct. Why not?
Yeah, I love this. Why not? Yes.
Yeah. Good. Today we've got some very animated discussions going, which is good.
It energizes the mind.
Yes, then that is exactly what is required in these SIMA sessions, right? They want you to think outside the box.
Yes.
You have to think innovatively. You need to think, just outside the box. Think of things which is not there, right? And they put it into the examiner saying, why don't we come up with this, that, and the other? And examiner has got a different answer suddenly, because a lot of the people, what they will do is stick to the no things, right? They're very, very number conscious, so they go on to that line, and that's exactly why the examiners fail those people, because they don't want number crunchers, right? So scorecard, I think you guys are quite familiar with the balance scorecard. So I'm not going to dwell too much in the balance scorecard area, but what you will have to do is you have to come up with balance scorecard. What would be the KPIs? So that would be kind of a homework. Balance scorecard, right? Yes. Right. What do you think it would be? Yeah. And then let's go into benchmarking. We can benchmark matrix, the pro benchmarking, and the different benchmarking that we can do, right? And we can look at potential improvements. I mean, these we can do it very well with this pizza company. But however, the trick is capture the information properly. This is where the difficulty lies. You need to capture and monitor, right? This is important, both of them. Okay. Pricing is my other big topic, right?
Is it so important in this in our case here, Andrew?
The reason is, the reason is because we're doing our dose centrally.
Okay.
Right? Then, and answering it. Right? We also have where we purchase certain produce in one area for the central group, because we and they transfer that toppings, certain toppings. Okay. So let us go into the transfer pricing. What is the aim of transfer pricing? So what do you guys think about it?
Well, let's start with the definition, Andrew.
Mm-hmm.
Let's start with definition. The transfer price is basically the fillings of items or equipment or services between parent company and its subsidiary, between sister companies, let's say, sister companies as well. There is a seller, there is a buyer, but they are in the same group, they are a part, and what I mean, what I transfer pricing is the negative news we hear in the media and that multinational corporations use transfer pricing to avoid tax.
Correct.
Yeah. So, I mean, can you remove this negativity from mind here and elaborate more? What's the side of transfer pricing here in pizza time case?
Now, in peak time,
yes.
what it is, why would we use transfer pricing is to promote autonomy. That's why we will use transfer pricing, right? And it clearly states here, correctly set transfer pricing, that is, correctly set transfer pricing is a way of promoting divisional autonomy, right? In head office, if I have other ideas of reducing taxes, right? Well, can do that with transfer pricing, which is ethical, right? But like you said, Yaqub, which is quite right, where they will use transfer pricing as a mechanism to kind of raise the profitability of the company.
But here we try to use it for the good of the company. And that's my question to you, Andrew. Example, please. Yes.
For the good of the head office. Now, if you have subsidiary in Saudi Arabia and the UK, and if he wants to Saudi Arabia, he will first, so he can keep us there because he will, if he can fight to this part of the world, he will respect it.
Yes. Yeah.
But it is consolidating the financial.
What we're saying is it will promote autonomy to that particular division, right? When it is done correctly. That is one of the key things that we advocate. And also, the price itself is right? That okay, just because your head office you transfer the pizza dough to me at $3 when I can get from outside for $3. Right? That discrepancy. That's where the companies will fall out of grace with a lot of authorities when they come and check. Right? So it's not that companies don't use transfer pricing to manipulate tax, right, and reduce the tax, but authorities do come and check this, right? So transfer pricing is one area they will check thoroughly because it's exposed to this kind of manipulation. Yeah.
Andrew, autonomy, to promote autonomy. Let's say the dough purchase is not centralized.
Mm-hmm.
And it will go and purchase its dough from their preferred source.
Mm-hmm.
That's what you mean. There will be no autonomy between the shops because each shop will have different cost of goods sold from different locations. The price, in this sense, promotes autonomy. It's done centrally. Is it that your point?
Not really. So what I'm trying to say is set transfer prices. Okay? The thing is, I'm a manufacturer. I'm manufacturing only dough. Let's say one section manufactures only dough. So I'm setting the transfer pricing to my other subsidiary companies, the stores, right? I will basically price it at a very competitive price, right? In one sense, okay, because now my all other 900 plus stores, and I'm saying, well, I'm not selling it to you at $20. I'm selling it to you actually more than even the market, right? I sell you at $3. I'm giving it to you at $2. So I'm very competitive, right? Then the other party, so party who's purchasing it, also has quite good transparency. It's transparent. The pricing. They also have that independence. See, well, by buying with internally, I'm advantage rather than going outside, because outside you could never ever get it at that price because you will break the purchase, right? Each one will buy small bits from different people, not in a centralized manner. Me, I can give it at a very good price because I'm selling to a 900 stores at a good profit too, right? But very competitive. So additional autonomy, if it's the price is set correctly, it be on both sides, I would say. On my side, selling it, yeah.
And as well, because then you can, as a professor, you know how much it costs, what it costs.
Correct. Yes.
If he's selling more than the market, why he's selling more than the market? The guy saying, I will buy it from the market. And from an owner's perspective, if his in-house manufacturing cost is higher than the market, it's better going to stop that operation and
correct.
The market. This is the way I look at it, because the fact of the matter is just doing the transfer pricing practices, you competitiveness between the segments also. You have a transfer price, you reduce your cost, you can betterment. And the guy will buy it also. He has a price and then he improves it on the cost. So you get both sectors.
On another hidden agenda, they will do something else. Now, when that happens, the transfer pricing, all the goodness goes out immediately. Right?
I have a question, Andrew.
Yes.
Which relates also here to pizza time. Of the central manufacturing of dough, are the same price to each, to each store I have. I will sell them the dough, but remember that we are the dough centrally, but we have different geographic locations.
Correct.
We'll move into new territories. I think it's called D land or B land or C land. So if I am, let's say, I open a store in Greece.
Yes.
The transfer price will be the same, but the cost will be different. Why? Because I deliver a longer distance to deliver the dough to Greece than to the Italian stores. So,
yes, right, and that is why you will not. Now, I come into forex. I will talk about it. We will say we will try to minimize our foreign exchange exposure, right? By doing that centrally, then transferring, to say to Greece, I'm having two problems. One is my transport cost. Okay. Second one is my exposure to foreign exchange.
yes.
Right? Because I'm manufacturing in Italy in euros and then sending it to Greece.
Yes.
Currency. Right? So two currencies. This is a big problem for me. If in one country, like I think we plan. So plan, I can everything in cent, right? But I'm operating quite another large operation in which is I, correct? So in there, you could work, you have the door done separately in that one, rather than you move stuff from P to I. Correct?
Yes.
Why would you do that? Because then your exposure to currency is also reduced, exportation is also reduced.
Great.
Manufacturing also might be cheaper, you never know.
You never know. You never know, right? So immediately you bring it down, right? Because of my exposures, I'm taking out completely. And the risk associated with it, transporting from A to B, right? To the other country, it's impossible. Impossible, right?
Like bread here in our local town, because you cannot import them from Qatar or Bahrain. I mean, it takes a long time.
Yes. By the time it comes there, its freshness is gone, right? It's spoiled.
Yeah.
Yeah.
Thank you.
Yeah. So limit within which transfer pricing should fall. The sum of supplying divisional's marginal cost and the opportunity cost of item transferred, right? Maximum, right? Lowest market price at which the receiving division could purchase. So the easiest way of looking at it, the maximum, your target, is lower than what is the market. It's the easiest thing, easy way to think about it, right? Anything that you are nation. Transfer prices based on market price. How do you set the price? That's also a problem. This is also an issue. I could say you could set the transfer price. You can ask, at what price this door transferred, right? And you could make that could be a target. The cost may be more than what is available in the market. Now that is the good point where you can advise, saying, well, that means you need the opportunity to improve the efficiency of the operations. Obviously, that's why my cost is high, right? The reason my cost of the dough is higher than the market. So I have a lot of opportunity to improve. Okay? But if I protect my dough manufacturer, right, there is going to be, it's like a protectionism country. Certain countries, certain governments protect industries, right? So as a result, you don't achieve efficiencies. You don't innovate, right? Because you're going to get protected anyway. Right. Okay. So transfer is based on cost, constant unit work cost and selling price. So should we put it on standard cost or actual, variable cost, full cost, or cost plus? So there are many ways that you can do it, right? What you propose, the one should be, right? So you can propose, right, to the management, well, this is the transfer price that I propose, and you justify. We can go into various forms, right? Another question may be saying that he has heard about the transfer pricing. He wants to look at creating this door sector as a profit center. Now he wants to use he wants to have transfer pricing as a new method of transferring these goods, right? Then he will ask what is the advantage, disadvantage, and also to advise pricing strategy should be, right? And talk about this, right? That's a question where we can talk about, well, we use standard costing, actual cost. Why don't we use variable cost, full cost, plus what are the advantages, disadvantages, right? So full cost is actually you're transferring all your inefficiencies to your other department. Correct? As a result, you're increasing your selling price. The cost, sorry, not the selling price, the cost of pizza. And at this, the margin per pizza is also reducing. Correct?
I think it's not it's a concern more on franchise because that is the external cost. When they say go to franchise,
Yes.
it's not price. It will be a normal price on that sector. Correct?
Which no.
We don't know.
Right. No. How they're selling it currently. Right. It says you're right because it says that they're selling the products.
Yeah, because they sell
Yes.
product sales on.
Okay. Capacity constraints that we need to look at and negotiating transfer price. So I will just leave this for you to read through and kind of get an understanding how this transfer pricing will affect our. So let me look at project appraisal. Okay, very good for us. We have plenty of projects for sure. Okay, and there are many opportunities for us to have projects. When projects, right? So what projects do you think you will get into?
Talking about bid time here or general?
Yeah. Pizza time. What do you think? Hi, but I would guess I would also say purchase of build. Okay. But you company acquisition.
Yeah, because do pay
Acquisition. Right. What
the French another the different model in terms of delivering these tools.
Yeah, IT investment. Right. This is a type of projects. I'm just saying at a high level, what projects will you get into? Right, IT investment, then plant, building, machinery. Okay, this is the ideal kind of projects that you will go into. When you go into these projects, you look at the taxation, working capital, inflation, what cash flow that will come through, right? Process of investment decision. How would you have investment, right? The decision making around this, right? What cash flow will you get, right? And then you look at the tax and working capital and inflation on this investment. Okay. Remember, now I'm going back to this, right? Because the model. Suitability, acceptability, feasibility plus sustainability model, right? We that investment decision making process. thing is, when you are looking at a project, you have to think unique about it in more strategic sense. Why am I saying it? What strategic objective is it fulfilling? Right? To ask the question, okay, what strategic or objective is fulfilling? I'm asking this, and it applies even in your day-to-day life, right? Be very good at investing in projects, but you ask them, what's the business benefit? No, right? Link it to the strategic drivers. So why did you do it in the first place? Because it was a fantastic idea at that time. And this happens over and over again across a lot in all companies.
Welcome to my work.
I was just about to tell Yaqub, welcome to you. You should ask your boss when he started this company, did he instinct the projection? What I see in this part of the world, the owner has an idea. He goes search, pays him the money.
Yes.
Writes, feasible report.
Yes.
Okay, the sugary part of it, then he tells you that.
So yeah,
and ultimately he has a decision that it's a very objective report. Ultimately, when you look at the reality, far actual.
Given this is the norm here in my country.
Right.
The ownership, and there is no separation between church and state. What I mean is, no separation between management and ownership in in many family businesses in particular.
Exactly. This is there, but we have to.
You cannot hold the CEO accountable. Why? Because he is the same owner. Whatever mistakes he makes, it will be repeated again and again and again, because he is the owner and nobody is willing to say to him, no, you are wrong.
Yes.
He is as a king, not as a CEO, in fact. And that's one of the dilemmas I go through, how to deliver bad news, to say no in a politically correct way. So I will not be shut off, so other things, they believe me.
I understand from where you're coming from, because sometimes they want to have a project, but they put a person in a place, and you have results overnight without giving him the time in the recruitment.
Yes.
You bring a person from a company doing very well, but he is doing well because of the tools that he has. The management, in terms of the employees, in terms of the financial capabilities that he has. So you can put him into a company. You don't have those things in place.
Yes.
You have wonders. And if you want to, if your costs are higher than that company, whichever price that you are pitching at, you will not get the business. So sometimes you understand, sometimes these things can go down the whole group. Because these where you have you think okay, and sometimes simplification is also a detriment. You try into backward integration, forward integration, and when the whole thing starts falling, this happened to the petrochemical sector in Saudi Arabia. They have a lot of backward integration. Now prices are at very low level. You can't come.
Let me let you know, Gavin, that most of family businesses in Saudi Arabia cannot survive beyond the generation. They disappear. They are gone. They are not run in a constitutional way. They are run in a professional manner.
Yes.
So when the second generation comes on board, there will be political fights between the family members, and the company will go into disarray.
You are looking for a job, Yaqub.
is offering.
When I get past the team, it will be much easier for me to look for a job.
Yeah. Good experience. Because the thing is, it is amazing. Even if the current company is doing things wrongly, actually you are gaining that experience. So somebody else you're not, you're seeing something unfold in front of you, and you're not paying the price. Someone else is.
Yes, exactly. Yes.
So that is the good thing, because somebody like you, when you go into market yourself, will have much more than any sim can offer, right? Because you will say the ground reality. This is what really happened, because people will take you for experience, because that's something that a fully qualified accountant who has had no experience can never give you. Point.
I see my as a marketing tool.
Yeah. So, I mean, it's an interesting thing where you could see, you talk about the owners, right? But I have experiences, and where Australia, this particular company, we looked at the IT investment. It was really funny, because this stock, again, with this company, it was listed in the stock exchange. It was a very large company, right? But they realized the IT investment is going crazy, right? It's not controlled, because we had exploration and upstream as well as downstream activity, right? When we looked at the whole thing, then Kevin and I came in and did a consulting for 2 months. They realized and said to advise to the senior management were, when you do investments, right, please go through a project review board for the whole company, because what they saw was there were so many products which should duplicate.
Okay.
Right? Because A doesn't know what B is doing. As result, both are doing the same thing. Then C thinks, oh, I'm going to start this good idea I have got. C will also start something.
Yes.
Right? So in the catastrophe here, right? You've been investing millions and millions, that effort.
Exactly. And I think in very large companies, where
The centralization really is important.
And you look at what happened to Schlumberger,
Right.
I think it was in the year 2000.
Yes.
They suddenly, the top management decided that, well, still company, and it specializes in IT, in technology.
Oh, yes.
I'm screaming, what do we have to do with IT? We are an oil field services.
Correct.
Why do you waste billions? And they have listed, I think, about billions USD, 5 billion. And they sold this failing company at the end. They sold for less than 100 million.
Wow.
It was big catastrophe, big waste of money.
So this is an example where companies move away from their core business and think, well, I'm good at doing this, let me do this, because I developed it in my company. Right? That happens. They developed it in their company. Then therefore they think, well, I can do this for other customers as well. Right?
Exactly.
We in this company with Origin Energy, we use Schlumberger. Because we use their system. So these are good examples. With transfer pricing for our area, what are the key things do you guys think that we have? setting the price, right? That's one thing. At what price you set it at, right? Then else.
And it will give variable cost in this case. And do we agree on the method for variable cost or market price?
Yeah, the price. Right? Then you should critique, right? Critique the strategy. Okay. Finally, recommend right, how review our current cost as well.
Yeah. Because only when you have market price, you higher than the market.
Yes.
Yeah.
So because what we're trying to do is, well, I say market price, but my actual cost might be much lower. So are we going and setting at market price? Maybe we should at a lower price, right? Well, our guys need to make, because, we got our product competitive in the market. Right? That's important. What should we consider in the pricing? Right?
To avoid clashes with authorities.
Transparency. That's important. Even higher prices or lower prices, both. Okay.
To be transparent to the government.
Correct. Right. Transparency. What else should we look into? What? Look at doing in the single country. Avoid increased cost plus foreign exposure. Correct? You're saying. Right. So we started about project appraisal. Right? We looked at we looked at project, the types of projects, right? And we look at the creation, decision phase, implementation phase, right? Then the post audit, post completion, right? Post audit is something that people try to avoid. Why is that? Completion audit.
You will finish a project and you will then audit it.
Maybe you see what
the thing is the benefit realization, right? Lessons learned, right?
I was phrase lessons learned. There is a story I will tell you next week.
I think
stories.
So there's a lot of information to start your own TV series.
Next week, next session.
So we look at post-completion audit. We look at benefit realization. Have we actually realized the benefit?
Yes.
Okay. That it is learned. Okay, lessons have we learned. Now this also happens. For lessons learned, we nicely keep it in a report buried somewhere. We do another project. We forget completely.
To rectify the problem.
And that's happened in my group, Angelo. To be honest, I mean, I'm just speaking and look into something and draw the lessons, but because structure of ownership and management got repeated again and again and again.
So lessons learned and review review when you start a hub. Okay.
I have to do this or what?
Yes. Then right wrist face, right? And other things that you never thought of have come about, right? Let's let me close that very quickly. We don't want to go to P2, 3, right? Measures, because I mean there are not only negatives but there are positives as well. Yeah. It's a control process, right? And so it can because it links to the KPIs. Okay. Right. The next ones we talk about all payoff methods, count rate of return, okay, and
PVIRR.
yes. Now what I would want you to really go through is right the net present value, IRR, the advantages and disadvantages, right? Okay, because when we do the mock exams, you will find there's always questions on this, right? You will get questions on this. For sure. So they will not basically ask you to calculate certain things, but will give you the information and ask you to again interpret. They will ask you about the discounting rate used. They will ask, certain, like inflation is so much, discounting rate is so much. They will give so many other parameters where you have to kind of come up with, well, what is the most appropriate discounting factor then? Right. So I would ask you for next time to go through this area. Right. If you're a bit rusty on these things, you should go to textbooks on payback, IRR, NPV, DCF. Right? So what we will do is close for today, right? And I'm also what I'm doing is now I'll start sending you the material that we're working on, that you can go through it as well.
Slides and the notes?
The slides, yeah.
Yes.
Because there's a lot of notes in it, so you can refresh your memory. Now we are in quite a good state.
Because I had, I want just to share a thought with you.
Yeah.
Would the listen now?
Yes.
Okay, so let me just share my thought with you. Yeah, I'm very, very on the opened up to join this program.
Yeah.
I was long been thinking about being certified in accounting, but I wasn't. To be honest, I can't blame anybody but myself.
Yeah.
I wasn't serious, and then to get my CPA done, my CMA done. I have those plans in my head a long time ago.
Right.
I didn't have the will.
Yeah.
To put them, in my past years. I have a great opportunity here. I want you and just to summarize or to make a roadmap where we are, what we have learned,
Yeah.
What we should know so far, what we have read so far.
Mm-hmm.
Because I was feeling lost at the beginning of the games, what's expected from me, what does me to review, read every week, and I'm still busy with my company annual audit.
Mm-hmm.
We're in New Year now, and they're auditing my books for 2015, and they're keeping me very, very busy.
Yes.
And that I couldn't allocate the sufficient time to go, deep into details of the notes and to review the notes that you are making with us.
So I'll tell you one thing, right?
Yes.
So attending the class is not sufficient at all, right?
Okay.
Because you need to apply. I think both of you have the potential to pass right away. I can tell you that. But then it goes into application of these. So the first sessions, what we did was we went through the whole case study. We reviewed the case, right? We kind of dissected the case. Now what we're doing is going through the application of the theory into the case, right? Because in this way...
Can I download the case and just from the website, from the Ultimate Access?
I have
sent
you the case.
Okay.
I have you via email. If you don't have it right away, I'll send it to you again.
Let me look at it. Okay, I will check.
Don't worry, send it to you again.
Okay.
Yeah, because you should have it. Okay. So that one, the thing, you have to know your case very well, right? Now, what I'm doing is I'm applying the theory into the case. I'm going through the past cards so that I will not. That is my structure, right? This is my structure I'm following so that I not miss out things. Next one I'm going to go through. You'll go through before you get into the mock exams. I will go through the top 10 issues, and then I will go through the industry analysis.
Okay.
So with that, you should know very well when we go into the mock exams. Having said that, you not just rely on this 1 hours for you to pass the exam. You put in a lot of effort. Let's do that.
To read the books.
You need in sense, you're reading, it has to be active reading, okay? You need to know your, go through your case study, make notes, right? Points. We have gone through the case and made points. I'll send that to you. Just back to it and then go through the whole thing again. Maybe you will see additional notes.
You will send the notes and the recorded discussion.
Yes, I will.
Okay.
So you have to spend some time going through your case study and you're making those notes. Now I'm taking you through now my theory into the app, right? So certain things I'm telling you, please go and like the NPV IRR. I'm telling you, go look into it. Like I told you, let's go in, have a look through the transfer pricing a little bit as well, because it gives you some good insight. Okay. So yourself, because we don't have sufficient number of hours to cover all that. And the other thing is, when you face the exam, it's a lot of unseen material that will come through, and you need to immediately apply. Familiar with the theory and the and the theory, the easier it's going to be.
Add information to the case study.
Of course. Now there is something called unseen material. If you go to the exam, they will give you unseen material, right? That's where questions will come. Let's say, right, I'm giving you examples of questions that may come. Similarly, they'll say, okay, this is scenario. We are thinking of purchasing this company that specializes in big data, and MD wants to find out your views on it. Right? So you can then provide when you provide your view on it, you will just say no, it's a bad idea. It's not pursue, but you should give justification as to it. The reasonings behind it. You will talk about, is it linked to the strategy? Is it linked to our objectives? Right there.
Yes.
Right. You're given some numbers which looks really good. You can talk about the numbers as well, but then you talk about the financial factors. Okay. And
just one question before we...
Yeah, sure.
Please. Now, when we come to the mock exams, I know these are, is it type, is it one or you have multiple?
Yes, essay type.
Essay type question.
Correct.
And this is a computer-based exam?
Yes, they're not telling on your handwriting, so you don't have to bother about that.
Okay.
Type.
Okay. Essay type, so you might have maybe from the whole, is it one presentation, one type of this thing, or multiple questions which you have to give essay type answers?
Actually, there are about 4 questions in this sketch, I believe.
Okay.
4 minutes, if I'm not mistaken, right? Yeah.
The
structure, yes. And when I come to the mock exams, I will go through again how to structure things for you. Right? Because that structure is really important at your exam.
Yeah, then we are homework to run through the case and then jot down as much as possible what you have and the technical part of it.
Yes.
This part of it, this
so that is the key thing. I have gone through that. Now we are going through the theory, but you also to again go through both and see, how
you can bring both together.
Correct.
And not just my last question. Maybe it seems stupid, but I don't think there's a stupid question. But are we automatically registered for the exam when we sign up for CIMA, or do we have to register individually? Silly.
It's not a stupid question at all. It is a very important question. Oh my God! You have to register, right, with CIMA. So please, I ask you to immediately contact tomorrow, right, and make sure that you're registered. I send to her and to you to ensure that you're registered. Please.
Okay. Fine.
It's on the 20th, aren't you, correct?
Yeah. So I'm not sure whether you're even late. Okay, just check.
Because I think here in Saudi, no?
Yes.
That I checked about. I changed it 2 weeks ago. Scheduled for May actually. And I changed 2 weeks ago, but then...
Exactly, I told you to change it, isn't it?
This case is not applicable, no?
Until February and June?
Yes.
Okay. That's the one game, I was not in focus, so... Thank you very much. Okay, so we will send me an email with Nasima to make sure...
Yes, I'm going to send an email. And what is your email, the number? That with you?
Yeah, I think we were registered with...
get the ID number.
Yes.
Number.
You can register yourself. You don't need Nasima. You can do it right away.
Yeah, you can go to the CIMA site and when you put your ID, it will come. You can fix the data.
I will register
there are about a couple of centers. So you can make the available center.